What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 8th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to talk about a major shadow that I don't think anyone is talking about when it comes to the crypto market. As we approach down to the lows of the supposed consolidation channel that many people are hoping may be the bottom for Bitcoin and the broader crypto market, there is a huge weight that many people aren't talking about that could yet again drag down the crypto market and showcase that there is still too much fluff, too much overvaluation, and still too much risk taking in the crypto market. That we have yet to see real capitulation that we usually need to find before a bear market truly ends. We've got a lot to talk about in today's video. If you happen to enjoy the video, drop a like and let's go ahead and kick things off. So I want to start here by just talking about the Bitcoin chart. Now, Bitcoin is not really my big concern here. I do believe, as you guys probably know from the past couple of weeks, since the relief rally had gotten to exhausted levels, we've been calling for prices to come down back to the consolidation channel. We haven't been adjusting our TA too much, but we've essentially been calling for more capitulation in the market as there just simply isn't enough buyer sentiment, and we reached the kind of relief rally levels that we've seen through previous bull markets. So, all the textbook examples here of a relief rally. We had the excitement around the merge, and we're going to dive into that. But generally speaking, Bitcoin has come back down towards its bottom range of the the consolidation channel that many people are hoping is where Bitcoin's price will just probably push sideways for some time, essentially bouncing around. But I want to go ahead and talk about why, all the while we might get a nice little bump up here over the next coming days, where we are likely to get shot down. And it has to do with taking a look here at the 4-hour time frame. That is essentially coming into contact here with the 200 MA and the 200 EMA on the 4-hour time frame. Now, you all know this has been serving as resistance here time and time again. We finally started to turn it into support, but that was yet again failed as new support. We weren't able to hold it for a prolonged period of time here. We were able to hold it for about a month in regards to price, but after had a significant breakdown, as we can see that there were still a lot of whales and a large amount of positions that wanted to be sold onto the market, and then likely a cascade of liquidations that furthered that sell-side pressure on exchanges, right? And now Bitcoin, the market leader here, is hanging down at the lows of its consolidation channel. Now again, we have deviated here through the channel, right? So I would not be surprised if we see a short-term breakout here, but I do not see a retest up towards this range anytime in the near future. And this is again going to lead into what's got me so concerned, because right now the thing that's been holding up the market is Ethereum. Ethereum has been really doing well here against Bitcoin. If we take a look further than the ETH to BTC ratio, we can see that Ethereum is not only just in its dollar pair much further away from its consolidated lows around $1,000, but the ETH to BTC ratio shows us very clearly since as far back as June of 2022 that we've gone up from around a low here of 0.49 on the ETH to BTC ratio all the way up to 0.084 here. We've seen Ethereum make a massive move off of the lows against Bitcoin, over 74 to 75% here since those lows, and it looks like we've still got room here. And I got to be honest here, this is an area that I sort of got wrong, or at least wasn't estimating we would get towards. It was the level we were watching, but I'll be honest, I didn't have my money on it. Essentially speaking, Ethereum could very well now, over the next couple of days, next week or so, going into the merge event, pop up here towards 0.95 to 0.1 on the ETH to BTC ratio, essentially meaning that if you got up to that range, if you had 10 Ethereums, it'd be equivalent to owning 1 Bitcoin, right? So all the while, that could very well happen here. I know many of you are wondering, Nick, if you think Ethereum's going to go up like 15, 20%, or there's a chance of that, why are you so negative? Because I'm not really excited about taking on a long trade on Ethereum on a potential continued rebound. And I'm not saying this is guaranteed whatsoever. In fact, I'm not 100% confident in it. The key thing, what I want to emphasize, and what I think everyone should be focusing on, is on the potential downside. It's always fun to think about how you can make money on markets and how good things could be in any trade or investment you make. It's another thing to think about what's at stake, what's at risk here. And I got to be honest with you all, considering the macro environment that we've been covering here in the channel, not to mention a more specific measure, taking a look at volatility in the equities market, higher lows over time, and increased volatility and uncertainty. I think there's a very big shadow in the crypto market that people aren't talking about. And it's not just Ethereum outperforming Bitcoin. That is a very big cause for concern to be making entries into Ethereum right now. But there's also another area that has got me concerned that I don't see anyone talking about because all the attention has been on Bitcoin and Ethereum. And that has to do with the altcoin market. Now, I want to go ahead and emphasize that a lot of people are looking at altcoin dominance when they're taking a look at the altcoin market. It's just a nice kind of broad measure, broad stroke of the performance of the sector. But one problem with this indicator here is that not only is it at its highest level since February 2018, so that should probably flash some warning signs, especially as we enter into a risk-off environment. It shouldn't be this high, generally speaking. But on top of that, Ethereum, many people assume, is making up a large portion of this. And it is. It is the second largest crypto out there. So it is technically the largest altcoin. Some people even disagree if you want to call it an altcoin. Essentially speaking, it does make up a large part of this dominance. But there's also another factor that makes up a large part, and that's the rest of the altcoin market. I want to go ahead, bring up a chart here that I think a lot of people simply aren't watching. Now, this is a chart that we've talked about within the Dash report for a long period of time. And it's something we've utilized in order to really garner whether or not we've really gone through real capitulation. And it has to do with Ethereum and Bitcoin's dominance. It essentially measures the market dominance of Ethereum plus the market dominance of Bitcoin. Now, what's really telling about this is that if we take a look back, say at 2017, when Ethereum really emerged, or emerged as a coin, no pun intended, and we started to see altcoins garner a lot of market dominance, this was the typical range here, where we saw a lot of optimism in altcoins. We started to see a lot of risk-taking. And you'll see some striking similarities here, for sure, to the altcoin dominance metric. But I think what's really telling about this is that we have essentially, even after all this correction in the market, we are still leaps and bounds away from the type of capitulative levels that we saw back in December of 2020. Now, I want to make it very clear, with how many new layer 1 protocols have come out, with how much new DeFi applications have come out, and all these new tokens and forms of value in crypto, I do not expect that we are going to go all the way back down to those lows. Make it very clear. I don't know if we're going to come all the way back here to 83% market dominance for Ethereum and Bitcoin. What I do want to emphasize is that seeing Ethereum and Bitcoin, especially with Ethereum's performance as of recent and Bitcoin pushing generally sideways since back in June, to not see this metric churning higher is a big cause for concern for me personally, considering the collapse of Luna, considering a lot of the setbacks we've seen, which means, more likely than not, in my opinion, that we've got another wave of capitulation. And I think we are likely going to see what some have called a cleansing in the altcoin market, similar to the dot-com era, where throughout the roaring 90s, you saw internet companies starting to bubble up and balloon into ridiculous valuations, with no revenue, no actual business plan. I think we could very well see that here in altcoins. And the weakening in growth here for the alternative market of cryptocurrencies outside of Bitcoin and Ethereum, as we can see, this metric should be going down if we're seeing, again, like really big excitement here for altcoins. When in reality, the altcoin market is just hanging at these overbought valuations. And if we start to see this metric churn higher here, which is I think what we'd see in a healthier market going into the later part of 2022 and 2023, that's when I'm going to start getting excited to buy into some various altcoin positions. That's when I'm going to get excited to just buy crypto in general. It's why we haven't been, going so intense on dollar cost averaging or even trying to buy the dip. That's the kind of capitulation I'm going to look for, at a minimum, retesting some of the important levels that we've seen here back throughout history, like here at around 70% market dominance. That would be much more healthy than entering into positions here at 60% dominance for Ethereum and Bitcoin. I want to see essentially that the majority of the valuation liquidity is in the safer plays, meaning that altcoin valuations that are out there in the market that may be fundamentally exciting are at much cheaper valuations. This kind of chart is one that I haven't seen talked about in the crypto space. And to dive into it a little bit deeper, I think a good viewpoint to take a look at is taking a look at some of the cryptocurrencies out there, some of the other alternative coins out there, such as the layer 1 protocols like Cardano and Solana and dividing them by Ethereum. It's one thing to look at their dollar pairs, which have been actually holding up pretty neutral for the past couple months. It's another to take a look at their Ethereum pairings and to showcase here again that we haven't really seen a large degree of capitulation. Now again, I understand some of you guys may think Cardano or ADA is fundamentally more valuable than Ethereum. I'm not here to debate that. The key factor here is that we need to see these smaller coins, roughly speaking, we should be seeing these coins that are smaller than Ethereum underperforming the larger assets, meaning that they're not selling off, they're selling off more. They should be selling off more than Ethereum, traditionally speaking, right? I'm not going to say it's going to play out exactly like that in all coins or that history needs to repeat itself exactly, but just take a look here since as far back as December of 2021, roughly around a couple weeks after the top we had in both altcoins and Bitcoin. The pairing really hasn't declined much. It's had some ups and downs here, but essentially speaking, we're only down here for the ADA or ADA ETH pair by about 7.6%. That's not the kind of capitulation I'd like to see. I'd like to see ADA against ETH starting to visit down to much lower levels here. I want to see it come down to the kind of capitulation range it's had in the past here. And it looks like it might be set up for that here on the weekly candle. Looks like we've got a nice dip here. But again, I think it's going to take time. It's going to take a couple months as we're taking a look at the weekly chart here, right, to come down back into this range here and find much more capitulative lows against Ethereum and Bitcoin, even as Bitcoin and Ethereum are starting to decline, right? Now, it's not just I'm not just picking here on Cardano. I also think it's the same case with Solana here. I mean, I'm just going to be completely candid with you guys here. There was like back a couple months ago an article, multiple articles that came out that proved the vast majority of TVL, or total value locked, basically assets stored in DeFi protocols and smart contracts on Solana, were artificially inflated by a few key manipulators who were able to take the same liquidity and rehypothecate it, essentially reutilize it over and over in various derivatives protocols. And even though all those fundamental things came out, Solana is still hanging at like 30 something bucks. And that has left it in a position where it's only down from its lows here back in May against Ethereum by about 6%. Very similar here to Cardano. All right? And again, not here to beat up on Solana, but in a risk-off environment where we're seeing the VIX, the volatility index, setting higher lows in equity markets, options market volatility is picking up, implied volatility is picking up pace, and people are really uncertain about the broader macro perspective, where we're likely going to be having a 50% plus correction in equity markets for the first time in a decade, in which crypto has never lived through. And people are just saying, buy the dip on these altcoins when they're this high of a valuation still against Ethereum and Bitcoin. I'm not buying it. Literally, I'm not buying it with my own capital, and I'm also not buying it with my personal market sentiment. I don't mean to be biased in any regards, guys. Trust me. I have no allegiance nor hatred of owning altcoins, even ones that have lacking fundamentals here in the market. If there's a good trade opportunity, I'll take it. And there's nothing wrong about that, right? I'm, as much as the next person, eager to find opportunity in the market. I'm a rational optimist here. I do believe that a lot of these coins are going to come back up in the future, but there is also a very good chance that a lot of cryptos in the market are going to need to get flushed out before we start to see these players come back. Plain and simple. No ifs, ands, or buts. Bear markets need real capitulation. And sure, we've seen that in Bitcoin and Ethereum and the broader crypto market to some degree. But we've never seen crypto live through a 50% correction in equity markets. What is that going to look like? All of our data science models, all of our current metrics could very well be broken in this environment. We could see Bitcoin come down, as many have talked about, towards around 14,000, 15,000, maybe even something more moderate like 17,000. But still, what is that going to mean for Ethereum? What's it going to mean for Cardano, for Solana, for the broader layer 1 space, for Binance Smart Chain, for all these other types of cryptocurrencies, all the DeFi tokens, for Uniswap and Compound? It's a big question to ask. Now, even though I have this generally negative sentiment here, You guys know throughout 2021 and even 2022, we're a little bit late to the curve on closing out of our positions. We were very big on altcoins. I think altcoins versus just holding Bitcoin and Ethereum give you great potential to be able to make some sizable returns in the market. Now again, there's no guarantee of anything, and I do recommend at the end of the day that if you're going to have exposure to crypto, a decent amount of it be in the safe plays like Bitcoin and Ethereum. But I'm also looking for the exciting plays out there in the market that are starting to offer alternative value propositions to that of Ethereum and some of the more established layer ones, trying to find the next bets that are going to do really well in the next bull market. And one of those plays that we've been continuing to watch here on the channel and is one of our sponsors for today's video is Kava Network. Now, if you guys haven't heard about Kava, Kava is really exciting. To just kind of give a quick rundown here for those who may not know, Kava is aiming to merge the Cosmos SDK with the Ethereum virtual machine, two of the most powerful layer 1 ecosystems, in order to offer a very powerful combination where not just networks like Ethereum can bridge liquidity over towards the Kava network, but also other EVM compatible chains like Avalanche, and also networks within the Cosmos SDK or Cosmos ecosystem, being able to serve as a vortex for liquidity to create one really powerful layer 1 that allows people to build in the developer framework of the two most popular layer 1 ecosystems. Now, I want to go ahead and emphasize some big key talking points here. Kava 11 liquid staking has launched on its testnet successfully. This is going to allow people who are staking Kava to earn yield, to be able to have a IOU essentially, or a liquid form of their stake tokens to go utilize in DeFi protocols. So this is going to add more utility to the network, which I think is really exciting. This whole concept of being able to tap into stake liquidity on the network while still being able to get your yield. Not bad if you can get it. And then on top of that as well, there's also the Kava 11 mainnet, which has been moved early October. Now, we previously talked about this coming up in September, but the big reason for this being moved is because of the fact that they're going to be basically accommodating for more layer 1 protocols. So they're going to have more layer 1s that can start to bridge liquidity and hopefully as well be able to bridge in the development code of previous protocols. So now we can start to bridge different types of decentralized applications into the network. There's already over 28 protocols on top of the Kava network. And this is really exciting to see how the ecosystem has just started to thrive. But this has become a major milestone for Kava as a network, mainly due to the fact of its Kava Rise program, which is aimed to basically bring about a lot of new Kava into circulation that are going to be as rewards for those who are building value within the ecosystem. So rather than being owned by VCs, they're owned by developers who are building value in the network and are rewarded for bringing TVL into the network. And on top of that as well, there's been a major move here in the governance proposal for Prop 97 to bring CertiK in to help with growth and security on the network. So CertiK being one of the larger names in DeFi security on a variety of layer 1s, I think this is really exciting. So if you guys want to participate in that, there's a link again on the governance website on app.kava.io. It's Prop 97. And again, if you guys haven't heard about Kava yet or are looking to potentially become a developer in the space, I recommend you check out the link down below in the description. Get involved, participate if you feel up for it. I think it's a really exciting opportunity. And again, for me, I think it's a very exciting experiment. It's all these layer 1 protocols really are. And merging these two really exciting ecosystems, two of my favorites personally, is definitely going to give Ethereum a run for its money in the long run, especially if they continue these ecosystem developments like they have. But it's all about building during the bear market, seeing which ones come out. And the key thing here is, again, like Kava and many other plays, I'm going to be looking at these plays over the coming months here. Once we get more consolidation and more capitulation in the crypto market, I'm going to be looking for opportunities in these alternative layer 1s. Plays that are oversold against Bitcoin and Ethereum in their pairs, essentially giving us rock bottom discounts. That's the kind of stuff that makes generational returns. And I think, again, as a good example, we're talking about Cardano, for example. If we just simply take a look, we'll go ahead and actually pull up the, maybe we can pull up the tethered chart here. I think this will give us a good amount here, just to get a good perspective here about how low things can go and what kind of discount opportunities you can get. This was a altcoin that a lot of people bought the dip on, essentially around 2 cents, right? These were the lows here. That was double bottom from here in December 2018, here in March of 2020. And it came all the way from around 2 to 3 cents, all the way up here towards around $3. That's a 100x return in what was already a pretty established layer 1 protocol in the crypto space, at least in the terms of potential Ethereum killers. And Cardano was just one of them. There was Solana, there was Avalanche, just all these plays. And there will be many other plays that come around next time. But I got to be honest with you all. Back to our key point here about more blood to come. It could very well be that the altcoins you're betting on are likely not in that camp. There will not be as many players the next go around as there was the previous time before. That was true in the 2017 bull market as we entered into the 2018 bear market, and it is the same when we stepped in to the 2019-2020 initial stages, the beginning of the bull market. There was a lot of good newcomers, but again, not as much as the previous time, and will likely be the same this time around. We have to be prepared for this as we go into the next couple of months. Anyways, guys, that's it for today's video. If you enjoyed this video, drop a like. If you agreed or disagreed with me, I'd love to hear down below in the comments. Get a conversation going, guys. It's one of the best ways you can support the channel. It's just engaging. Let me know your thoughts. But until the next video, thank you all so much for watching, everyone. I'll see you all in the next one. Take care, everyone.